Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Wednesday, July 27th, 6:02 a.m. as I'm starting the video. Nice bounce in futures overnight. Let me go through the numbers. Bitcoin up 2%, oil up 0.5%, SPY 1%, Q's up about 1.5%. And small caps up 0.75%. Over on the earnings front today, before the bell, a couple names that I picked out: Boeing, Spotify, Tech Resources in the materials space, Hilton, and Humana. And then, of course, after the bell, we've got Meta, which will be the big tech name today that everybody's focused on. Ford, following on the heels of GM yesterday that didn't have that hot of a report. Qualcomm, semiconductors, also got Lam Research in the semiconductor space. You may want to look at Texas Instruments that reported last night. I did not see those numbers, but that may influence if you want to do anything there. And Teladoc. And then tomorrow, of course, after the bell, Apple and Amazon will be the last of the big guns in mega cap tech to report. Really all about macro today, aside from Meta after the bell. We've got durable goods first up this morning, but then all eyes are going to refocus on Jay Powell at there's the press release at 2 p.m. and then the presser at 2:30. And then right on the heels of that tomorrow is going to be the GDP print before the bell. And then on Friday, inflation print before the bell. So there's going to be, I would imagine, a lot of macro data point induced volatility from really Jay Powell going forward to the end of the week. For me, just as far as, I don't really think this is a time to, go for the brass ring with a ton of exposure. I think it's fine to, do what you're comfortable with. And certainly if you see something intraday, and that's your thing, and you're able to trade that, just be aware, like, for instance, today, heading into 2 o'clock, if you're sitting there with, a good trade on, I would certainly book that trade ahead of the press release at 2, because you're going to get, you're going to toggle between being rich and being wiped out, I imagine, in that first couple of bars. And so if you're sitting there with something, just keep your eye on the clock as the day goes forward. And I have no idea if today, we're up nicely here in the pre-market, but does it dribble lower into the Fed, or just kind of go into suspended animation mode? We'll just have to see. So keep the Fed focused in your thoughts as you head into the afternoon. And then don't forget that, post-Fed, you may see some of that volatility coming out. But then remember, you got GDP before the bell tomorrow, and then inflation on Friday. So there's going to be, I would imagine, a lot of whipsaws. So don't get caught up in that turmoil. And if you've got extra time and you decide, you don't want to really get into it that heavy, you can do some chart work or kick back and relax and recharge your batteries, get ready for next week to see kind of how the whole thing shakes out. So couple ways to approach it. So let's get into the charts. Starting out with Bitcoin here. We've been watching this gently rising channel. We talked about a potential breakout here above 24,000. That got rejected, and now we're down at the bottom of the channel. So in terms of risk reward for being long, I mean, you're at a pretty nice spot here. If you caught it, yesterday or whatever, great. But you've got a nice line to shoot against on the long side if, if you want to take a long trade in Bitcoin, or if you're bearish or whatever, you've got the trend line. If this were to break, I would imagine you'd come down to 20,250 along this line pretty quickly, and then maybe even back down to 19,000 if things start to fall apart. So we're at pretty close to a nice pivot there. Was really disappointed in oil yesterday. We are long at least a couple of energy names, XLE, Sandridge Energy. Some of you may have some other oil-related E&P names or whatever. We started with a strong open to the morning, and then they just faded it all day. And then I saw a tweet that it was announced that they're going to release 20 million barrels from the SPR. And I wasn't really clear about what the tweet was saying, whether that was 20 million more than they had planned to, whether it was 20 million more this week, or whether they were adding 20 million to the back end of what they were planning on doing. It really doesn't matter. What matters is the price action, which was disappointing. I thought we were kind of on our way, and that proved to be totally wrong as they faded it. Now, you can see that on the WTI chart, we're at a really critical spot. Price is grinding its way down, sitting on technical support, and the 200 right here, right below 95. And we've got the downtrend line that yesterday was threatening to break out. I mean, we're at the end of the road. Within the next couple days, we're going to know, does oil catch a bid and break out, or does it break down? And, we'll obviously see that in our energy equity charts. But if you've got those, I'd certainly be watching oil. And if you see, price beginning to break down below like 94.50, there's really nothing stopping it from going down into the high 80s. And that's definitely going to affect, energy equities. So time to sit a little higher in the chair if you're in energy equities. I forgot to mention at the top of the program, if you're new, please run your player at 1.5x. I think it's the right speed for the pace of my presentation. I think you'll do great at that speed. Looking at our oscillators, NIMO has come down from over 60 now down into 33, kind of relaxing the rubber band to a certain extent. Same thing on NAMO. The NASDAQ has come way back down to 10. So we're back towards the middle of the range, especially on the NASDAQ. And, if we see an upside resolution to some of these NASDAQ heavy names, Apple, Amazon, Meta, Microsoft, etc., we've got some room to run on our oscillator now that it has backed off. Moving into SPY, of course, we were down yesterday. We had been watching this in green, the 50 EMA, which I thought was an important pivot point. I still do. We came down to 390, which we have been saying was a key level to hold, and it did hold that. And now, in the pre-market being up 1%, we're back up towards 395 in the pre-market. Now, of course, be aware, depending on where it's at on the cash open, let's just say hypothetically, these pre-market gains hold, we're going to have, a 1% gap below that will open up, and you'll need to be on your guard when that happens. So we're going to open up here in the 394 395 area, so then there'll be a gap below that you'll need to take into account and see if it's gap and go or a gap and fade. But the reason I think 390 is so important is, you see we've got this support band sitting on top of this high volume over price bar here, and we've got a line of reactions here at 392 and then multiple ones at 390. So I think that leads further credibility to the fact that you really don't want to fall back into the range. You fall below 390, then you're looking at 386, and then you've got a lot of gaps below that need to be filled, and that could be the impetus of starting to roll downhill. And of course, we've got all the big catalysts at the back half of the week. Not a prediction, just saying there's certainly the potential in those macro releases to bring it down rather quickly if the market decides, hey, this thing is the economy, the Fed, everything's going the wrong way. As traders, we got to go level by level and not just say, oh, well, the inflation was 8.5%. That's all well and good, but how does the market react? And if you were to see, say we open up at 395 and they come down and fill that gap, even if you miss that, and then it just keeps on going and you break 390, I think you've got a very objective place there to put your short on, even if it's just for the balance of the day, and look for 386 and lower. If they grind it higher, I think you've got this prior high to use as a target up towards 399 400. When we go to the Qs, down 2% yesterday, but just like SPY, we're set to open about 299 300, so that would be back above the 50, back up, pushing towards this high. I think you want to look for 304, and then this prior high up at 307, whatever it was. We'll see that on the 60-minute chart in a second. But I think this 295 area and the 20 EMA that comes in at 294 is going to be really important on the downside. And you can see it here. Here was that 296 level. Resistance, resistance, resistance. Now we undercut that yesterday, but now we're set to have a gap open back up towards 300 here this morning if that holds. And we've got a nice uptrend line off of these lows where you can see reactions along the way. And right here at 291.50, we've got two things. We've got the intersection of the uptrend line and we've got the gap below. So, if you're, up here in the morning and you're a sharpshooter and you get a sense that they're going to fade it, or you say, you know what, I'll take $1 of risk. Say it opens at 299, you set your stop at 300 and you try a short and you get that gap fill and you keep going, your target would be down here in this 292, 291.50 type area where you've got multiple places of support there. And then if that breaks, then you'd be inclined to get short again for a gap fill and a move down to the bottom of this high volume bar down towards 288. So, when you've got a gap open, obviously one of two things is going to happen. It's going to keep going higher or they're going to fade it. So there could be a really nice opportunity there. IWM has been pretty resilient in this little last few days of wobbling. You can see we've had 4 consecutive days where price has reached back towards this 178 and has held each time. So we definitely have that line right as far as being important. You can see rejection, 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 rejections all along here. So now that is a big level of support. We're going to move a little bit higher. We were up 0.5%. So we're definitely in this range. You can see it here. We had reach backs to this 178.25 area. It's still in that range. We're going to open a little bit higher. Buying support along this line has been working. You haven't been making a lot, but if you're sitting there trading it and you find IWM down at 178, the objective trade is to be long with your stop just below, and then you've got your resistance points. I think a major technical development would be a breakout above 181.50, and then you'd be looking for this prior high at the top of the gap fill at 183.57. You see that tag there, and then higher if it resolves higher. I think a real red flag would be obviously a break of this uptrend line here and a gap fill. If that goes below, fills that gap and keeps going, then you're back into the high 160s. So, but you've got some really nice lines to shoot against, well defined, and then you can just, as you always do on your active trading, go level by level. But I don't mention it on every chart, but RSI has held 50 and PPO is coming down for a reset at the 0 line and flattening out. And after this quick run, we kind of have this flag developing here, right? And that's your momentum reset and your RSI reset. Both remain positive. So those are bullish factors that would be supportive of trying to get long, at the bottom of the flag and look for a breakout. If this flattens out and turns up, this holds 50 and starts to move higher. So when you're looking at price, don't forget to glance at your indicators, your RSI and PPO, and just realize that the midpoint line, 50 on RSI and 0 on PPO, are de facto pivot points. You get RSI drop below 0 and go negative. RSI drop below 50 and go into the bearish regime, those are bearish developments. And you'll most likely see that in price, breaking down below 178, etc., and then trying to make a move down. Here's a perfect example of, just losing level by level. I mean, it's been, we were up at trying to break out a 184 just a couple days ago, and now we're back at 158. Meta did see a little bit of a bounce this morning, not as much as some of the other NASDAQ names. Of course, you've got earnings after the bell. But you can see it didn't stop at a random point. You had a prior low back here. So you've got an excellent pivot point at 158. And now this large volume over price bar, which was once support, is now resistance. So it's really got to break back above 165 to kind of get up to 172 and work its way back up to the top. You can see how important this 172 was with all these reactions. And if you were Johnny on the spot, remember what we've pounded the table on. Once you leave the trading range, you do not want to come back in. And so now this area here looks like your bull trap, right? Everybody got long. They came back. Okay, back touch of the breakout, that's fine. But when you moved below, all these people realized that they were wrong, and then that adds more fuel to the short side, and it just let go. And I can only see one or two green bars in this whole run here, right back down essentially to the bottom of the box with earnings yet to go. And I have not looked at the daily chart, but breaking below 156 and these prior lows would certainly be a bearish development if that happens. Moving on to Apple, I think your key level remains 152. Now, we lost that briefly yesterday. Now, with the pre-market move, it's trading up towards 154. But, of course, earnings tomorrow after the bell, so we'll see how that handles it. I think the big moves here would obviously be either taking out the highs at 156 or losing 150 down here at the bottom of the channel. After this big run, you lose 150. That would be a great place to anchor a short, with your first target being 147. And, if Apple comes up, takes out the 200, and then loses it and loses the up channel, that, those are going to be strikes against Apple, and you want to be on the right side of the trade, which would definitely be short if it lost 150. Tesla broke out from 750, had this big run up to 845 at the bottom of the gap, and has been dribbling lower. I think you got to watch this uptrend line and watch 750. You can see here, once the initial move was made, it just basically oscillated for 4 hours, didn't do anything. So here, I think a break above 780 would get you going to the upside, and that would be a pivot point if you ended up getting short. I think your first target is 760 at the top of this gap, in the uptrend line, and then for a gap fill if it breaks. And if it breaks and loses 750, then what I would do would be to take that to the bank if you were already short, and then reestablish yourself below 750, being below trend and moving back into this range, having all this being a fake breakout or a bull trap. Yesterday, Microsoft short was a gravy train. If you got it, congratulations. Stopped right on a dime on this uptrend line. And then, it's pretty interesting, after earnings was announced, took a deep look below. I think it came down into this 246 area to look at this prior low. And then I guess they had some strong forward guidance and did a moonshot back up from, the mid 240s all the way back up, and pre-market was pushing, 259, 260. So there'll be a significant gap below that you'll need to account for. And if price wobbles here and ends up breaking out above 260, I think that would be a nice long, and you'd be looking for 263.5 on the upside. Just be aware of, the big gap below that'll need to be filled. Amazon had a rough day yesterday on the Walmart news. Gap down, kept going, found the uptrend line and stopped, but below the prior trading range. So I think it's incumbent upon Amazon to certainly hold 115 and then recapture 117 and then fill the overhead gap. And of course, we've got their earnings tomorrow after the bell. Google, bad day at the office. Came down here, had lost, and this is a good technical study here. Let go, right? This was on. I don't know what the catalyst might have been here. Anyways, it gapped down, lost this trend line, lost this level of support where these prior lows were. You can see the value range, came down to the bottom of value, and then back tested the area of the breakdown. So you got that classic breakdown, back test, revisit the scene of the crime, fail, and then last night after their earnings got a positive move back up towards 109. So in this particular case, just be aware that you've got some overhead resistance with this uptrend line. I would really like to see it recapture 110 and then have an opportunity to grind back through all of this resistance. So we'll see how that goes. Just be aware of the big open gap below. Netflix has been holding in there pretty well. I think the level to watch is you do not want to see Netflix go back below 205, just for the reasons that we've been talking about. A breakout and a back test is fine. All this area should be support. But if it isn't, and it loses 205 and loses the 50, then you got a short down to 165. So keep that scenario in mind. But as long as it stays above 205, I think longs are fine. And above this 222, I think it opens the door back up to the technical target of 245. SMH had an interesting day yesterday, outperformed the market. We had this little flag, it dribbled down, but nothing really impulsive. I think there was a couple opportunities during the day where, this could have broken down a lot harder. I think the area you really got to watch is 218. Same methodology that we just been talking about. Resistance, 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 breakout. 218 would be your back test along with the uptrend line. That should hold. And if it doesn't, I think you got yourself a short there. Re-entering the range, losing the uptrend line, and with a gap to fill below. So I think, if in the next couple days, if it loses 218, I think that's your short for that gap fill, and then probably going to move even lower. But as long as that holds, your breakout back test is intact, and you can try to stay on the long side of SMH. I'll just jump over to Micron real quick. Only down, 0.81%. So I think here, if the semis catch a bid and Micron reclaims 60, then I think that is your long entry, looking for 62 for starters. Going back to ARC, here's ARC F. Gap down, came into this large volume over price area here, support. I think your pivot here is at 1645, and you can see the levels there if you want to actively trade ARC. ARC G, I think, outperformed, down only 1%. Right here at the high volume over price bar, I think your pivot is 3650. As long as that holds, the door is open to 38. You drop below, you're probably coming down to 35.25, right in that area of all this support. ARC K, kind of wobbling here, lost the uptrend line, but is sitting on the high volume over price bar here at, I'm just going to call it 44, a little bit below. If it were to come up through, recapture 44, I think your first target is 45.50. As long as it, stays below, it could dribble down here into this 42.75 area, where you've got a lot of volume over price support, and you've got technical support here with all this, support showing up. I think if it loses 42.50, then it's definitely on a downhill trajectory. That may end up being a good trade, especially if you see, you see them fading these pre-market moves, in Microsoft and Google and whatnot. Maybe going into the Fed, everybody gets a little squirrely. That may end up being a good short trade if you see things starting to fall apart. ARC W looks like a fake breakout there. You can see resistance, came back into the range, and now is almost back down to the bottom of the range, down here at 49.50, possibly even 48 at this prior low. But I think 49.50 is the really critical area of support that needs to hold, and you've got a pivot here at 51 with 52.50, and then the open gap above. Just a couple last charts here. We have some calls in Wells Fargo. We're sitting above this high volume bar here, just 42.80, something like that. 42.90. I'd like to see that hold. I'd like to see financials catch a bid. We're up 1% in the pre-market. If some way we get a move today up into the mid 44s ahead of the Fed, that might be a place to book some profits on that. Of course, you're welcome to hold it through these macro announcements, but I think we're in 42.50s for August. You would have a nice gain on those if we were to, pop up 1%, have a good morning, and financials catch a bid. You may want to take that one off. And then I've got a longer term short on EWG, which is the ETF for Germany. We had a breakdown. We had a bit of a kickback rally last week, and then down 2%. 2.23% yesterday. So I'm sticking with that for now, seeing if this doesn't come down and take out this 21, which would open the door for much lower. And that's basically an energy play, recession in Europe play, kind of a thing. Not a huge position, but basically taking a shot on the short side of EWG. So let's wrap it up there. Just a quick recap. Meta after the bell, Jay Powell at 2 o'clock, and then the presser at 2:30. That's usually the most important part. How does he spin this thing? Keeping in mind, there's going to be 2 months between now and the next Fed move, with Jackson Hole in between. So there'll be a lot of data points that come out between, after this Fed meeting and Jackson Hole and then September. So how he frames, I'm sure he's going to do 75 basis points today. How he frames that will probably have a lot to do with how the market reacts. But then, of course, we got GDP and inflation. I'm sure he already knows what the inflation number is, so that may color what what he says between 2:30 and 3:30. So keep it light. Be aware of all those macro factors. If you do have positions, be prepared for a lot of volatility. I would not freak out if you get a giant green bar or a giant red bar or both within the first 5 minutes. Par for the course when you've got these big announcements. So anyways, hope you liked the video. If you're new to the channel and you appreciate the commentary and having objective lines to trade each and every day, please hit the subscribe button, the alarm bell for the YouTube content, and then jump over to the show notes. There's a place where you can link to the blog site, drop in your email. It takes 5 seconds. And then you'll get all my content morning, noon, or night. It'd be great to have you. And then you'll get an invite to our trading room. We've had a couple of nice additions over the last couple of days. Good to see those guys and gals in the room. It's always great to have that camaraderie. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.